on the desk knows that valuation is a very gray thing. Guy's point is the primary point of the market right now. Drawdowns that happen out of nowhere, it's a very fickle thing. Should something be 8 times free cash flow or 12? Very gray. What we do know is certain stocks are taking big hits, and there's risk that others would do it. Apple, no lines, no judgments might be. If we were to move ahead, one thing we can see is that it's been in this well-defined channel. In fact, let's draw some circles just to put this in. We have literally responded over and over and over to the bottom and top, and we're basically near the top. And my hunch is that we're going to revisit the bottom as part of this general trajectory. Let's keep going. Here is Apple on top, same chart, but relative performance to the tech sector. And the problem here is that this has basically been underperforming for quite some time. Let's go forward another way. Here is Apple on its own. No judgments by me. Let's go forward. Is it a double top? It has that element to it. It also has the element of a prospective break in trend. In fact, if we move it forward once again, that's exactly what happened. So if I were to zoom in here, you can see that we've just started to break trend. It's not the greatest thing. Let's try NVIDIA. This is a big name, obviously, sort of marquee. You're talking about a stock in the past 2 to 3 years, 50 to 300. Let's move forward. And guess what's happening? Let's get our zoom. We're just starting to break trend. Now, if I do relative performance and put in the line, watch what happens. Not only, again, are we breaking trend absolute, we're breaking trend relative. We've broken below the relative performance of the S&P. And then finally, let's do the same thing, but relative to the tech sector. Again, we've got the same circumstance. Uptrend is now in question. You can see it there. And what's also in question is the relative uptrend. These are not good circumstances. I would be careful with both these stocks.
Wow. Carter Worth? Should we invite him over to the dinner? We've got to have him because he had a magnifying glass, and I think we need to dig in a little bit on that.
What is going on with the magnifying glass? That is hot, dude.
I thought you put that on there.
That's the greatest thing I've ever seen.
I love it. The new technology. It's amazing. I mean, here's the thing. Here's why Apple is so important. Obviously, it's not only it is the biggest company in the world, not only is it a major holding in about 200 ETFs, but it's the only one of the big techs, if you will, that we talk about daily that is a Dow component. How important from a market weight perspective is an Apple stock?
Well, I mean, it's 3.9% of the S&P. We know it's 900.
The sixth heaviest weighted stock in the Dow.
Right. Listen, there's an historical thing where a stock gets 5%, it's got a problem. Exxon did it. Cisco did it. General Motors did it at its high. There's been a handful of others. It never got that big. It's only been at where it is now at 3.9. But either way, the issue is sentiment's a fickle thing. If you break Red Hat, as seen, Netflix, then all of a sudden it spills over to Facebook. Amazon, Google, all good numbers, and they all fade. It wouldn't take much to upset the great sentiment that is in Apple.
Go ahead, BK.
Well, I got a question that's related to Guy here. So I think what Guy was trying to say, and I don't want to put words in his mouth, but it appears that there's a liquidity vacuum out there. So going to your world in that we have, where is demand for these stocks, right? Are we, in something like Apple, stretched away from the demand where we could get that 10 or 15% drop? Is that what you're seeing in the charts?
Well, remember, Apple doesn't have that kind of beta. Most of the big drops came from stocks with a beta of 2 or higher. But what we do know is it's the most popular and sort of the most relied upon, considered safe by some people. It's biggest holdings in not only big mutual funds, but if you look at holdings at Merrill Lynch and retail accounts, it's the darling. It's the GE of its
every hedge fund.
Every hedge fund
in this city and abroad has Apple as a top holder. And of course, it doesn't
have the valuation issues that Karen talked about with some of the others. It's not a Netflix or an Amazon, but it is not immune from sentiment, and it doesn't take much to break when other things have broken.
Let me ask something. You've come on, not today, but in the past, and talked about the concentration of the FANG stocks being much of the gain in the market this year. So as we've seen the FANG trade sort of unravel a little bit in the last few days, the market is not really down that much.
Yeah.
What do you make of that lack of concentration?
Well, the market, it's a rotation thing. So we've seen financials and industrials come to life, healthcare a little bit. But remember, the market's not really up that much. We know that the market itself is up 4.8, but the equal weight is up 3.2, and the median performance of the S&P 500 stock is 1.7. 1.7 is not really up. It's unch. Yeah.
So this is a leading question, maybe I mean it to be. S&P 2872 in January. We recently tried to test it again. Number one, now we're back at 2800. Caterpillar, great numbers, $10 billion stock buyback.
Popped up and faded, closed
Faded today. Stocks that shouldn't move 10% are moving 10%. Are all these little things trying to tell us something bigger about the market?
I think it lacks momentum, and momentum is a powerful thing, and some of the great idiosyncratic growth names are under pressure. And yes, there's been rotation into financials and industrials. But it would be that group plus healthcare, the core middle, that would have to take the market to a new high. Or it goes back into tech, which makes us that much more fragile. Again, the top 5 stocks in the S&P are worth more than the bottom 270 stocks in the S&P. We are so dependent, and we're starting to
That's
lose.
what we've been talking
We're
about.
starting to lose those one at a time.
But shouldn't we be heartened to see what's going on in transports and industrials that are stocks that, frankly, in this economy are doing quite well?
Well, it's case by case. The transports, you single remember,
and even the banks are
transports are a price-weighted index, and itself is dominated by UPS and FedEx. But other industrials are not as good, right? Caterpillar is a case.
No, but rails, airlines have been on a nice little tear.
That's the transport.
FedEx is doing fine.
Cummins engine. It's not Eaton or Emerson. It is an improvement. But remember, this was a space that was down some 13, 14%. So it's a mean reversion trade.